What is all this kerfuffle about the Port of Darwin? And is it time to kiss and make up with China? And what about the bully boys from Beijing? What are they up to in the iron ore market? And are the best of days behind BHP, Rio and Fortescue? And finally, who do we believe in this inflation debate? Is it transitory, or are interest rates heading higher ASAP and the bull market is doomed? I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. Paul, any story about the Port of Darwin? How can you get excited?
I'm already yawning. Peter, who cares about the Port of Darwin? I mean, look, it doesn't matter who owns the Port of Darwin or who's leased to the Chinese. It's not as though they can pick it up and take it out, right? They're not going to.
But they might stop our Navy from getting into the port.
Well, our Navy, what? 2 working ships, is it, Peter? Let's get serious.
And a very serious seal.
I mean, Huawei I can understand. There are some other issues, security, but look, this is one for the pure rednecks, right? I reckon the rednecks are worried about the Port of Darwin, but we do have some issues with China, so I shouldn't underscore that.
Yeah.
But this is not the big one, right?
It's like the tip of the iceberg. The iceberg is Huawei. I think 10 investment projects have been rejected by the Australian government. And Paul, everyone thinks it's all started with the coronavirus. Where did it come from? Where did it come from? But really, that was 2020 that question was asked. In 2018, we banned Huawei.
Yeah.
Huawei.
And that's a much bigger issue. And
that really cheesed the Chinese
off. And that's why it rates right up there. The Port of Darwin's just as I said, it's a redneck thing. It's the sort of thing that a couple of the crazies from the coalition and flow around, and it really matters, but let's not lose too much sleep on that. But the relationship with Beijing is still important, Peter, and that's pretty rocky, and there's no sign of that changing.
That's right, and you know, our next story about iron ore is related to it, but I think the bottom line we have to point out here is we've probably got a year of not travelling overseas, and therefore that $69 billion of spent overseas will be here. After that, if we start losing serious exports, it could be trouble for Australian economy.
And we shouldn't ignore there are an increasing number of warmongers talking about, the next war over Taiwan, and if that happens, that's going to be, that's I won't say the black swan, that's going to be a catalyst for a major thing in the steel market.
Yeah.
So we can't ignore this risk, but we just shouldn't lose too much sleep on this particular one.
Let's go to the next one, on the share market, BHP, iron ore price, and the bully boys in Beijing.
Well,
fingerprints all over this
fingerprints are over. Tell the futures market, sorry, you're wrong, boys. You got to sell because we don't want the iron ore price that high. Look, there's nothing they can do about it apart from jawbone it down, Peter, and that's what they've been doing.
Yeah.
Now, I have no idea how the iron ore price went from 180 to 230 in the space of a couple of weeks, and back to 180 almost as quickly, but something happened. I mean, look, there's the same issues. Chinese steel demand is very robust, right? Production is constrained in iron ore because Vale's not there. So it's all coming out of Australia. They can talk about what they're doing in Africa, but that's 5 or 6 years away. They've got to buy our iron ore if they're going to produce the steel to feed the growing domestic economy in China. So there's nothing they can do about it, Peter, but this is just noise.
And the thing I've started to understand is that Beijing's basically saying to the steel producers, don't allow the price of iron ore to go up by buying too much. Because if you do, your margins are squeezed, you're paying more of it. But I was thinking about the other buyers. So all the building companies, they would buy from the steel producers, and the steel producers are probably still maintain their profits by raising prices. So it's really affecting the whole sector in China, and they live off infrastructure spending.
And it's a delicate balancing act, and that's all they're trying to do is smooth it, right? I mean, so we got out of control. I mean, new supply is coming, but it's a long way off. And while the economy, and we're in a growth phase, and the growth phase in China and demand globally is going up, it's going to be good for iron ore. So I don't think this is the time to abandon those stocks, right?
BHP, Rio and Fortescue.
But look, I'm not going long at these prices, Peter, because we know it's not sustainable, but I don't think anything has fundamentally yet changed to say this is the time to get out. So I reckon just to play with it, if you're long these stocks, hang on, a little bit of volatility, see it through. Would I buy Fortescue at 50 currently? At $22? Probably not, but that's because I've been long for a while. It's just time to play. Just let the profits run on this one.
Well, I'm waiting for BHP to pay me my dividend.
Then
I might think about hasta la vista, baby. Finally.
Remember, BHP's more than iron ore, a lot of copper. Copper's in huge demand. What's the copper price? I think that's the best indicator of growth. They say Dr. Copper. It's pretty firm around $4.50, and it's...
One day we have to work out why they call it Dr. Copper. What's Dr. Copper about?
Move on.
Let's move on. Next one, inflation. This can't be boring. Are they lying, Paul, when they tell us inflation is only transitory? It will come back down.
Well, if you listen to all the noise coming out of the Fed governors last night, they're all out there speaking from the same hymn book. Yeah, this is
transitory.
It's transitory, and the market has calmed down, and bond rates have fallen in the last couple of weeks in the US. We've got some more data coming, I think, later in the week, early next week, which might just change that again. But I'll back the Fed for the moment. Follow the central banks. They've been pretty well right so far. And the market will calm down on inflation. But if they don't, then we've got a new ball game in town, right?
I think the interesting point is this, that when you look at the sort of industries now that would be raising prices, and the classic one is, even in Australia, if you try and fly to New Zealand now, the cost of an air ticket is far more expensive than 6 months ago, because less people were able to travel, less people wanted to travel. Now everybody wants to go to New Zealand, and why wouldn't you? What a place! Kiwis, the best people in the world.
Yeah.
He's not even reacting. I was being a little bit cynical. I love the Kiwis, but they're not as good as that. But the bottom line is everyone wants to go to New Zealand, so air ticket prices are going up. But eventually, when we fly overseas, those ticket prices will come down, and therefore the inflation rate will go down.
No one will want to go to New Zealand. When we can go to Europe, no one will want to go to New Zealand.
That's unfair, Paul.
Yeah, it is unfair.
I would go to watch the Wallabies beat the All Blacks.
Yeah, you've got a long time in front of you while that happens. But I think the important point is that companies still, sure, there's a couple coming out of COVID, things have changed, but most companies aren't increasing prices, Peter, because they can't afford to, right?
No,
There's too much disruption, there's too much power of technology out there. And I think that's what we have to bear in mind. Sure, we've got some higher commodity prices, higher oil prices, and that's giving a bit of the so-called producer prices a bit of a nudge, but companies are afraid to increase prices. I don't think that's going to go away in the short term.
In fact, we're not even increasing the price on Mad About Money.
We're not increasing it, and we
same
should
price.
be. the same price. Absolutely.
And if we double it, it'll still be the same price.
Be the same price.
I'm Peter Scott.
I'm Paul Rickard.
And we're Mad About Money.